Hello and welcome to the day ahead. It's Thursday, September the 4th. I'm Andrew Gagan. Well, the local market is set to reverse course this morning after beginning September negatively, with ASX futures up around 0.33%. Stocks in Europe rose, while soft US labour caused bond yields to fall along with the US dollar. On Wall Street, the Nasdaq and S&P rose, boosted by tech stocks, while the Dow finished slightly lower. Shares of Alphabet surged after a court ruling which allows Google to retain control of its Chrome browser and Android mobile operating system while barring certain exclusive contracts with device makers and browser developers. And shares of Apple benefited, as the ruling also preserved lucrative payments to the iPhone maker from Google. Business software provider Salesforce forecasts third quarter revenue below estimates as clients rein in spending on its enterprise cloud products due to macroeconomic uncertainty. Shares of Macy's jumped 20% after the department store raised its annual forecasts, whereas discount retailer Dollar Tree fell heavily after the company forecast current quarter profit below estimates, with tariffs seen driving up costs for the retailer. And shares of US airlines lifted as oil prices fell. Well, Reserve Bank Governor Michelle Bullock has welcomed the rise in consumer spending as revealed in yesterday's stronger than expected GDP figures. Speaking in Perth last night, she said, "We are seeing it come back, and that's welcome. We're seeing the private sector start to demonstrate a little bit more growth now, which I think is positive. What it means for future interest rates, I don't know. All I would say is that if anything, it's probably a little stronger than we thought it would be." Well, in the US, job openings fell more than expected in July and hiring was moderate, consistent with easing labour market conditions. The quit rate remained at 2%, layoffs above 1%, and the unemployment rate was forecast climbing to 4.3% in July. And the Fed's Beige Book of regional economic conditions reflected economic uncertainty over tariffs. Flat to declining consumer spending was reported as wages failed to keep pace with rising prices. And FOMC member Christopher Waller has said we need to start cutting rates at the next meeting, and then we don't have to go in a locked sequence of steps so we can kind of see things where they're going, because people are still worried about tariff inflation. I'm not, but everyone else is. Well, US Treasuries have advanced, pushing their yields lower following the jobs data, which reinforced expectations of an interest rate cut by the Fed later this month. The US 10-year yield down to 4.21% and the 2-year sliding to 3.61%. And the US dollar fell against the yen and Swiss franc. The Aussie dollar is trading at 65.4 US cents. And Bitcoin is currently trading at around 112,000 US dollars. Oil prices have tumbled ahead of a weekend meeting of OPEC Plus producers that is expected to consider another increase in production targets in October. Brent crude falling more than 2% to $67 a barrel. Copper rose around 2%, iron ore up almost 1% to 103 US dollars a tonne. And gold has extended its record-breaking rally on expectations of interest rate cuts and geopolitical concerns. Spot gold up more than 1%, touching $3,576 an ounce. Locally today, we get the trade balance with a surplus of more than $5 billion expected, as well as the household spending indicator for July. Among the companies trading ex-dividend today are Bapcor, BHP, NIB, Reliance Worldwide, TPG Telecom and Yancoal. That is your day ahead. We'll see you again tomorrow.